Are you self-employed and are considering buying a house this year? Let's talk about what is and what is not possible. So, self-employed borrowers traditionally, for conforming guidelines, it requires 2 years of tax returns. Now, if you've been in business at least 2 years, then oftentimes if credit's good and you have enough down, you can qualify with 1 year tax returns on a conventional loan. Now, your government loans, your FHA, your VA, your USDA, traditionally you're going to need to see 2 years in business and 2 years of tax returns, and then average those years. Whereas conventional, if we can get away with 1 year, we can use all that income. So let's say you started a business in 2020, filed in 21, didn't get a ton, or started in 21, filed early 22 and didn't make a ton, but in 22 and you file this year and you make a lot more, sometimes you can get away with 1 year. Now, if your credit's a little lower, probably not going to work out for you unless you got a bunch of money down. Now, with that said, there are also programs for self-employed and borrowers that don't necessarily use tax returns. So if you've got money down, there are bank statement programs. There are 1099 programs. There are loans that exist for almost every self-employed situation. You know, bank statement programs, maybe you have a lot of cash flow in the business, but you haven't shown that you make a lot of money or paid yourself a lot of money. Those options do exist, but just know that there's something out there. Now, back with traditional conventional loans, sometimes you can get away with, as little as 3 to 5% down on a loan using tax returns. So if you're getting ready to file for 2023 and you're not sure if you're filing enough, reach out to a competent professional. Reach out to me. Let me look at your 21 taxes. Let me look at your 20 taxes. Maybe you made enough. Or let's look at your 22s and project what you need to claim to make that work. Now, I'm not talking about tax fraud. When I'm talking about maybe not writing off everything that you could write off to get you qualified. Or if you bought that car, using depreciation to add back into your income or miles on your Schedule C to make that work. Now, I know a lot of this is Greek, right? But if you're self-employed and you have a good accountant and you have not filed taxes yet, but you want to buy a house this spring, we definitely need to talk. We're experts in self-employed income. We can walk you through it. Now, again, back to other options. We even have programs with no proof of income. So maybe you don't show anything, but you've got 20, 25, 30% down. We can still get you done. So reach out to us. Let us walk through every scenario we have. Let me show you the options, whether it be a bank statement loan or, tax returns or, obviously calculating off of 1099s, whatever that looks like. There are options to make it work. Now, again, like we've talked about previously, sometimes you just don't show enough, but maybe I've got a bunch of assets. I know I've talked about asset depletion previously, and this is a little bit longer video, but that is an option as well. So for every scenario, we typically have a way to solve it, okay? Reach out with questions. Let us know how we can help. If this content is helpful, please like and share and comment on our channel. We appreciate you paying attention and watching, and thanks and have a good day.